House Speaker Mike Johnson said today he will not call for a vote on extending enhanced subsidies for people buying insurance through the Affordable Care Act. That effectively guarantees the subsidies will expire at the end of the month, and premiums will spike substantially for some 20 million Americans who get their coverage that way. In a moment, we'll hear from Republican Senator Bill Cassidy, who's a key player in this debate. But before we do, we turn to the first of two reports on the subsidies and alternative ideas. William Brangham focuses tonight on how the subsidies work and what's at stake if they expire.
Because tens of millions of Americans will be a whole lot healthier from this moment on.
It was March 23, 2010, and Vice President Biden whispers in President Obama's ear, "This is a big effing deal." And it was, signing of the Affordable Care Act into law.
Today, after all the votes have been tallied, health insurance reform becomes law in the United States of America.
It was complicated to pass and complicated in its structure, but the ACA, which was quickly dubbed Obamacare, had a fairly straightforward goal: expand health care coverage and keep costs down. And over the ensuing 15 years, the ACA has been mostly successful on that first front by expanding Medicaid and by helping people buy insurance. All of that helped cut the uninsured rate in half. But that promise of lower prices, what President Obama often called bending the cost curve, that has been a much harder nut to crack.
In the United States, we spend twice as much money on health care as many other countries do.
Cynthia Cox analyzes the Affordable Care Act at KFF.
The ACA worked by using taxpayer dollars to reduce the cost of health care for individuals that qualify for those programs, but it didn't do a whole lot to address the underlying reasons why health care is so expensive.
As health care prices keep rising across the system, health care premiums do too. With the ACA, to soften the blow of those higher premiums, targeted subsidies were built into the law. Avik Roy co-founded the Foundation for Research on Equal Opportunity, and he has served as an advisor to past Republican presidential candidates.
Part of the rationale of the subsidies was, well, if we're going to regulate what these plans can offer and how they can be designed, they're going to be more expensive. And if they're going to be more expensive, then some people will have trouble affording them.
Despite those subsidies, by 2020, enrollment had stalled. For some Americans, the plans still cost too much. So during the pandemic, then President Biden boosted those subsidies and expanded who was eligible for them to higher income brackets. And they worked, cutting costs for consumers and driving a surge in enrollment. While those enhanced subsidies got more people covered, they were also very expensive and temporary. Congress gave them an expiration date, December 31st, 2025. Hence, this New Year's Eve deadline that we are all talking about.
This is a failed program.
The Democrats created the problem. We've got to solve it.
Are they going to vote for this bill and bring health care costs down for the American people, or block this bill and send premiums skyrocketing?
Here's how the subsidies work. What someone has to spend for an insurance policy is capped at a certain percentage of their income on a sliding scale. So, for example, and there's different plans and deductibles to consider, but generally speaking, let's say I make under $22,000 a year. I'd pay nothing for the basic benchmark health insurance plan. But as my income grows, so does the percentage I'd have to pay, up to 8.5% of my income once I start making $65,000 a year. The remaining cost of that policy, no matter how expensive, is paid for by the federal government. And though they are sometimes referred to as tax credits, in most cases, the money goes straight to insurance companies.
What most people opt to do is to have their tax credit dollars sent directly to the insurance company that they pick for their insurance. And then that way it lowers their monthly premiums directly so that that person doesn't have to pay the full premium up front.
In 2025, the total cost of the ACA subsidies was an estimated $138 billion. That's 5.5 times NASA's entire budget.
The plans are much more expensive than people believed they would be in 2013, 2014. And as a result, the subsidies have become more needed because fewer people can afford the plans in the ACA. And that's what creates the policy debate that we're having now.
If the subsidies are not renewed, nearly all of those 24 million enrollees, overwhelmingly low and moderate income households, will see huge spikes in their premiums.
On average, people are going to pay about twice as much next year as they do this year.
45% of Obamacare recipients, almost 11 million people, can currently get their coverage at no cost, but that'll change if these enhanced subsidies go away. For example, a family of four making $45,000 a year will see their premium increase from $0 to around $1,600 a year.
It is a lot of money to someone who's maybe barely making ends meet to begin with.
People like Crystal Akers in Kentucky.
For the current plan that I have now, it showed that my monthly premium would be about double what I'm paying. As far as I'm concerned right now, I don't have insurance. I turned off my payment for November.
Cox also says some older Americans will be especially hard hit.
So that big spike is going to happen for older people who have incomes just above 4 times the poverty level. So for an older couple, this might be an income of $85,000. They actually, because it's 2 of them, might see their premium costs go up by almost $20,000.
Avik Roy argues this crisis is a moment to reassess some fundamentals about the ACA.
I think the question that a lot of people are asking is, do we just throw more subsidies at the problem and paper over the fact that the ACA has led to these much higher prices for health insurance? Or do we try to reform the design flaws in the ACA so that we can actually have not just lower health insurance for those individuals, but for everybody who has to shop for coverage on their own?
But time is running out for that kind of compromise. The Congressional Budget Office estimates without an extension, 2.2 million enrollees will drop their coverage in 2026 alone. People like Melissa Ruff of Jacksonville, Florida.
Here I am, 57, 7 years out from Medicare, facing being uninsured with a cardiac condition. I can't afford it. It prices me out of health care.
And in Tennessee, Tanika Mason says she has to have insurance.
Our daughter is a brain cancer survivor, and we have to go with the insurer that covers the specialist that she needs. So not having insurance is not an option for us. It would ruin us financially.
And that's the trade-off at the heart of this standoff. Keeping healthcare affordable for Americans on these plans is very expensive, but leaving people with no coverage at all has costs of its own. For the PBS NewsHour, I'm William Brangham.